So as always, if anybody has any questions or anything about anything we talk about, feel free to just drop it in the chat and we'll go through it. All right. So first things first, let's go over the economic data for this week. And again, I'll just give a little rundown on I guess the relevance to it, like which data events I care about. Like numbers really don't mean a thing to me. I honestly have no idea what our current CPI, PPI, any of that nonsense is. I just need to know when it is, specifically the time. I don't really want to be front running that data as it is volatile. Now, look, our anticipation is that price goes where we want it to go, but if we're in something prior to that, there's just a higher chance of us catching a wick and potentially stopping us out before ultimately going to where we wanted it to go. So that is something that we want to avoid. Getting stopped out sucks. And so that is, I guess the big picture, the big idea behind the economic data. Again, the numbers, not a clue in the world. And if you go back historically and you still run our setups, our models, you're not going to know what data came out on those specific days either, but you will notice that the big picture remains the same regardless. Okay, so tomorrow we don't have any red folder data, red folder being the highest of impact news that we could potentially see. Tuesday morning we have PPI at 8:30 a.m. and that is most definitely a red folder event. We have Wednesday CPI, which is again most definitely a red folder event, and that is also pre-market on Thursday. Wednesday. Thursday we have course retail sales. Wow, we really do have a busy week this week. That's also at 8:30. And Friday we have nothing. Okay, so Monday, Friday pretty dead, and then we have Tuesday, Wednesday, Thursday, which packs a punch. Okay, earnings wise, we don't really have anything huge. I think the following week is when stuff starts to pick up in that department for Q4 earnings. Also, I'm like 99% sure that it's next Monday, which is MLK / inauguration, and I'm like 99% sure the market's closed. I don't have it in front of my face here, but let me just do one more thing. Zoom out. Doesn't say anything about it on Forex. We'll revisit that. It's okay. So that is just economic data. Again, I think that is extremely important for the just overall understanding as to not that anybody really would, right, unless you're fiending for some pre-market futures trading. It's not like options markets opened or anything like that. But following that, ideally we could see some pretty smooth PA, which would be ideal, of course. But on to the next thing. We'll do our little overview here, and we could take a look, and let's just zoom in a little bit more. This is from a monthly perspective. We'll work our way down, of course, but from the monthly perspective, we did get inside that monthly bullish imbalance here on NASDAQ, so that is a good thing. I think the worst of it is over. There's one thing that's leading me to, I guess, just going into it open-minded. There's just one thing that doesn't really overlap, right? So if we were to go over to ES here, you're going to notice that we still have these relative equal lows and this monthly imbalance that is still like 100 points away. I think that is like the big downside risk in this current scenario here. I know you're going to say, well, the monthly on NASDAQ is where we got into it, right? So here's the thing. Even if we were to say wick lower on NASDAQ, get into that bullish imbalance on the S&P, we still got 18 days left on this monthly candle. It could be one of those nasty situations where we wick, maybe not take out the low of the candle that created the imbalance, but kind of get things back in line and even, where now ES got into its monthly imbalance as well as NASDAQ. So I'm just kind of treading lightly and proceeding with caution here in terms of longs on NASDAQ. And just to kind of bolster that claim, very similarly here, just from a weekly perspective, we have this breaker, which is in premium, so really not the most ideal breaker for me personally. Do I think price needs to necessarily come down to discount? I'm still on the fence about that. I don't really think so. With this monthly imbalance that we're currently in, and where does this monthly imbalance 788 really gets disrupted with a move down below that 20,029. But really, again, until I'm starting to see bearish levels get wiped, or the formation of new bullish levels, I'm really not all that crazy about where we currently sit. Now, let me just mute whoever's in the chat right now. Sorry, Snaz. But again, from where we currently sit, we are inside a breaker. We haven't yet dismissed this breaker. And also noteworthy, if you take a look left and up, no imbalance is formed on the weekly time frame, right? So if there were to have been a weekly imbalance, I would be leaning much more to the weekly discount idea. But because we haven't formed that imbalance to the downside, I'm not really I'm not really leaning too heavily on that idea. And I do think ultimately the worst is behind us. That doesn't necessarily mean that this low is in and that's it. But leading into tomorrow, okay, let's just take a look. So we did complete this little daily Mando model here from your high that was set in December 24th to your low that was formed back on January 1st. You had your discount retracement into a bearish imbalance, ultimately to flush down through those lows to complete the model. Our new range looks something like this, with your high down to your low. No imbalance just yet, suggesting that price wants to bounce from this point, but we do have another bearish imbalance here in discount of that new bearish range. And we're also working on potentially forming a pretty big daily bearish fair value gap here. Okay, so by the end of tomorrow, do we get to 21,218? If we were to do that, that would prevent the formation of this bearish imbalance. If we do form this imbalance, let's just say market is done for the day right now with this exact setting, I would be leaning for that ES continued retracement down to get into that monthly fair value gap, which is a little bit lower as well. So last but not least, we'll pull it on over here to our NASDAQ hourly / 4-hour chart. Okay, so ultimately we had painted this, I guess, during live trading one day, where we've swept at 20,972 relative equal lows. And while we did get a bounce, this is probably the most important thing. And of course, my lines, me drawing those lines, that's just me trying to anticipate what I think could happen. But if you were to zoom here, you would notice that we have not formed any higher time frame imbalance, whether it's on the hourly or the 4-hour, and we actually did create a 4-hour bearish imbalance here on NASDAQ right here. Okay, so if we were to get up here and not completely fill that, what is that high? 21,233. Look how that lines up with the daily time frame. 21,218. That prevents the daily bearish fair value gap from forming. Is that something that we see early on in the week? I don't favor it all that much, especially now that we have this here. Okay, so no imbalance is suggesting anything higher for me just yet. And then on the flip side of that, really didn't just get into an imbalance to kind of justify more downside at the current moment, right? There are some relative equal lows down here. So if we were to come down and take this first, then I would anticipate some sort of Monday / Tuesday low of the week with the potential for an end of week bounce, get us back into discount, which ultimately at this point would be showtime here. Okay. And from there, that's where I'm hands off, right? It's either going to be the best short for another leg down, or it's going to be the quickest stop out where we start to get ready to shift structure yet again. Okay, there are more relative equal lows down here, and again, until there's something showing me that there's the slightest bit of urgency to the upside, until then, there's like less than zero interest for me. So that is just the NASDAQ ES big picture. I think the big downside risk here really is that ES bullish fair value gap, which is again about 120 points lower. What does that do in terms of NASDAQ? I think that would most definitely get you through this imbalance, but does it take out the low of the candle that creates it? I don't think so. I think it would just be that long wick, and in the moment it's going to look terrible. That wick is going to give you a heart attack, but remember that these bodies are the ones that are telling you the story, not the wick. Okay? So that's just the big picture. So does anybody have any questions or anything about that? Yeah, no problem with the pick. I mean, with the microphone. No worries. Beautiful bears, yeah. Yeah, I mean, look, it was much needed. Something that, I've been right about this, so that's a good thing, I guess. But even starting in the beginning of December, I think in the December monthly prep is the video, you could see it, but um, just the way that we kind of had pathed things, we were looking at a pretty slow start to January, and this is not anything new. If you were to go back really over the last, I think it's like 5 quarters now, pretty sure 4 out of the 5 have began really slow, right? We had January of 2024, where was that? Um, might have even painted a green, yeah, but look at it from the weekly perspective. Remember that first week of January 2024? Huge knife, everybody kind of shat themselves, and ultimately we had that weekly bullish fair value gap there to catch us and push it higher. Very similarly here in April. April is the 4th month, start of the 2nd quarter, very similarly where we puked to start that quarter, ultimately getting a run up following the discount retracement into a bullish imbalance. And where are we? July, 7th month. Here it is again. Slow start to the quarter. Okay. And I think October was the only one that didn't kind of follow that same pathing. Let's see. Yeah, October was a little bit of a shit show. But that October shit show, without forming any bullish imbalances, really is not really the best thing that could have happened, to be honest, because now we look left and we notice that we really don't have any imbalances, even in premium, right? Not the most tradable in premium, but still would offer us a little bit of an area where we would feel comfortable with it bouncing. Like at this point, I'm looking left, and other than this breaker that we're really at the bottom of, and that monthly bullish imbalance, of course, you look left on the weekly, and it makes it a little bit more difficult to pinpoint an exact location for where we could get into and bounce from. And if I'm not mistaken, low here is 306, yeah, and that is 310. So we did leave some more relative equal lows all the way down there. Just really from this point of view, not like the most beautiful chart. Now, I don't know if we were to, let's just say we do make this swift move down to 20,165, getting us into discount of this weekly range. To me, that has to be a like serious trampoline type effect, and it also has to line up with what we saw in the ES monthly here. Is that 100 points on ES worth 1,000 points on NASDAQ? I'm not so sure about that correlation, but I think that would be like seriously necessary to keep this bull train going. Below this imbalance, which really gets you to 19,832.25, I think we see like a actual monthly retracement, which would be really, really bad for the bulls and really, really bad for a lot of people who are hinging on the long idea. But as you know, just by the composition of my model, I would prefer to be buying in those situations where it seems like the world is going to collapse and all of that. Realistically, that's getting you the best bang for your buck in that situation, knowing that I can pull the trigger if I were to be wrong. I don't mind taking the loss. I understand that I'm not always going to be right, and there are situations where it's not going to work out, right? And with that in mind, I would actually prefer buying longs off red candles and buying shorts off green candles into obviously specific levels. But so that's just my overall take on NASDAQ, ES, the whole market. So I think that covers that. If anybody has any questions, of course, feel free to just drop them in the sidebar. My head is like gonna explode. This no sugar thing is really killing me right now. But I'm powering through here. It's like insane. Let's see. Now, there's a bunch of questions that people had asked, and I said, to me, look, I can type them out to you. I just think it's a lot easier if I'm like verbalizing it and also showing it on the chart too. I think it's a little bit easier to understand. So let's do the questions first, and then we'll move into um, the specific names that people wanted to look at. So any tips for someone with a smaller account, less than 1,000, on how I should approach long-term or trade ideas? Long-term contracts, just A+ setups only, no weekly or 0 DTE, see green, take green. So that criteria really just needs to be broken down bit by bit. So what do I mean by that? Look, if you're looking at a setup that it checks out on the higher time frames and everything like that, right? You're seeing a weekly target which is much higher, but those contracts are pretty damn expensive. Um, if I was to look from a smaller time frame perspective, with my general idea and the general draw on liquidity being higher, then could I just not look for that highest? Maybe it's a weekly buy side target. Maybe look for something on an hourly time frame. Like you might hear myself or Ryan say it sometimes. We say a low hanging fruit objective, right? What we mean by that is like we're not really looking for the big overall play out here, but we are looking for like a smaller time frame, shift or buy side on a smaller time frame to get snagged prior to then that massive big level. So you could do that while also still taking some time on the contract. So for example, I'm going to make up a ticker. Let's say ABC ticker. We're anticipating price from a monthly perspective going to 170, right? And at the current moment, we're at like 130, right? We look at the contracts. We look for 6 months out, at the monies. Ideally, at the money is, to me, much more manageable. And the reason I say that is because, yes, they cost more, but when you get in the money on those contracts, the deltas go ballistic, and meaning per dollar move, you make much more money. And also, your theta is not going to get as vicious because the probability of success in that situation is still much higher than what it would be if you took a contract that's $40 out of the money. But now in this current situation of this made up thing, right? We see that our ultimate weekly target is like 40 points higher, but we want to trade that on a smaller time frame. Due to the fact that those contracts are really expensive. You can still maneuver that, right? You could still look for, say, instead of getting contracts that are 6 months out or 3 months out even, maybe you look a month out, but instead of looking at that big picture 170 that you were targeting, go down to a smaller time frame and try and identify a smaller swing high that you can uh, anticipate price getting into. And we're plunging a little bit. We're going for that last week low to start off futures here. But does that make sense there? That was one of the questions that I'd gotten, and just wanted to clear that up a little bit. But I just want to make sure that makes sense, right? We can just look for smaller time frame targets, while still looking at it in the big picture. Not so much keto. I'm just trying to like kick soda was the biggest. That was my one vice. I don't drink nothing else but soda. I love soda from McDonald's. No, I haven't gone over NVIDIA yet. Now, I'm questions. We're gonna do we'll do the tickers next. When Rumble 100? Yeah, I looked at Rumble. I think Rumble's in a pretty good spot here. You were trying to short McDonald's out of business here, right? Yeah, no, I'm working to try and get completely off of it. I'm not I'm still eating some fruit and stuff, but yeah, it's crazy. I've been off sugar for like 12 days at this point, right, since the new year, and I'm already down like 4 or 5 pounds. Not that I'm obese or out of weight or anything like, or out of shape or anything like that, but I'm just trying to be a little bit more healthy. But all right, let's go back to those questions. Let's see if we have any more, and then we'll go into the names that you guys had posted. Do you ever play pullbacks into discount? This is a good question. Even if the overarching trend is bullish, vice versa for or trend is bearish, vice versa for bullish. Okay, so basically what this question is referring to is like, if I'm anticipating a retracement into discount, there's one thing that needs to happen in order for me to really look for that discount, and simply put, that is the formation of a bearish imbalance, right? Once that bearish imbalance forms, that is when I'm anticipating that 50% retracement, and that gives me some structure to trade it, right? And that is the odd NAM model, which is really part 2, or the second model that I use. That's going to be the next video that comes out in the 2025 mentorship. It's just basically another model that sets you up with a well-defined trade idea to trade downside in what is overarching a bullish trend, right? I know it seems like the world is ending right now, but we're still in premium of this bullish range. We ain't even in discount yet, really, from any time frame you want to look at it from, right? Um, so that, and for a long time I wasn't trading that downside. I just needed some structure to it, and I feel like I finally put something together that makes sense. One, and two, you can justify moves. So really, once that first bearish fair value gap forms, this is something you can back test on really any chart, any time frame. It's not going to matter. You can go back and look and wait for that first bearish imbalance to form, and there it is. There's your trade idea right here. Entry somewhere inside the bearish imbalance. You could even go to a smaller time frame to be more precise. You could have your stop loss set at the high of the candle that created that imbalance, and you could be looking for the target, which would be the low, which is essentially just a bearish Mando model from a smaller time frame. But on your big picture, you're looking at something like OddNAM, where we're going to get us down into 50%. So we could basically play bearish Mando models down to 50%. And once we're at 50%, even if we decide we want to come down for this imbalance, I am very much not bearish anymore once we hit 50%. I'd prefer not to be trading short when we are in discount, just due to the fact that I've seen probably 10 million times over the last 3-4 years when price gets down into discount and it erupts and it goes back for the highs to complete the Mando model. So I don't fight that. So the thing about the odd NAM model is that it doesn't offer you as much in terms of like range, right? We're really only playing the upper 50% of that range, right? We're not playing for the discounts or anything like that. So the bang, I guess the I don't even want to say risk reward, because the risk reward is fine. It's well defined prior to entry, but I guess the level of reward is not nearly as big as what the Mando model would be, knowing that the Mando model is always going to be greater than half the range is what you would be making. This is not so much the case. Maybe if we cut this range in half and like this, okay, and let's just say, 50% from this high down to 50% is like right around here, you would still technically be achieving more than 50%, just on a smaller scale. You're not gathering a much larger range. Does that make sense too? But that video will come out. It's pretty short and sweet and right to the point. But I think it's good, and I think it's something that you can look towards playing for sure. You could technically just flip the chart and play the Mando model. No. Yeah. I mean, basically, yeah. So what Lone Star just said there was you could basically just flip the chart and be playing the Mando model, and he would be correct. It's just when you look at it from like the bigger picture. So like, just for example, take a mental picture of this 24-hour from your low to your high. Okay, that first imbalance would suggest 50%, and we can ultimately be playing downside until we get 50%, right? If we look at it from, even a smaller time frame, you're going to notice that it's just bearish Mando models, right, on this time frame. The reason why I call it odd NAM is, especially if it's on the higher time frame, we can kind of use that as a guide to get us essentially just to 50%, because after 50%, I'm not bearish anymore. Right? And that's the thing. This is where things really get like kind of, fucky in a sense, where it's like I'm bearish on a long term. I'm short term bearish, or I'm sorry, I'm long term bullish. I'm short term bearish. I'm medium term bullish. You like it really just depends on like the fractal and the time horizon that you're looking at a specific trade, and that's why things get like really lost in translation. Like, look, I think that like 99% of the people that are posting stuff on X are terrible, but sometimes I don't, sometimes I do, but sometimes I don't even like, kind of like roast them or anything like that, because I think it can get lost in translation sometimes, where it's like, yeah, I think Tesla's going to whatever the all-time high was, right, and beyond, but in this short term I'm not bullish on it, right? So it's like hard to like explain that in a sense, especially when it's over text, and that's why I like doing things over voice, because I can make it like a point. I am so bullish on Tesla long term, but in this short term medium, I just posted something about it a little while ago. I'm really not. And look, can we justify a move from where we are currently on Tesla? Sure. And I'll be the first one to tell you, yes, okay, we could definitely get into this bullish weekly imbalance and fly and go back to those highs. Is that something that I would favor? Something that I would play personally? No. And just in short, we're not in discount, so I don't want it there, right? So we could justify it, sure. Is it something I want? No. Um, am I long-term bullish on Tesla? Yes. Short-term, I'm not really bullish on it, no. I will be bullish again on it when we get to discount, right? So it's like there's a lot to it. So that's why I try not to roast them too bad when they are at least trying to present like, okay, my long-term outlook is good on this, but over the next couple of weeks, I think it can go down. If they're like actually truthful about that, or when they say that, oh yeah, I'm bullish on this, and then it drops like 200 points, and then it's like, okay, well, you're kind of just wrong at this point, you know. But whatever, it is what it is. Okay, so let's go next question here. Let's see. Um, green tea. I could hit that. Caffeine helps curb it. Huh. Maybe I should, but then I don't sleep. That's the problem. Um, yeah, it's gonna that level gets swept there, Ryan. That's most likely. Is that the monthly range you have mapped out? Sorry, I missed the beginning. Yeah, no problem. This is the weekly range right here. This is the monthly range on NASDAQ. Oh, whoops, here. Let me do it like this. From this low, we took out this high, right? You can go to each one of these little highs. Notice that 50% was not tagged here, okay? That means our range wasn't set, right? This bounce here was a premium bullish imbalance. It can happen. Is it favorable? Is it something that I want to trade? No, not really. That's fine, okay? So that would be my monthly range on NASDAQ, okay? Let's go back. Let's see if there's any more questions that I could do. Oh, and then Raj Beer said, going through the videos and concepts, I realized NVIDIA recently completed the MM on the higher time frame. Yes, it did. If I'm reading correctly, I believe a bearish imbalance was made on the daily chart. Yep. What should I currently be looking for in NVIDIA support? And will that bearish imbalance that was created on the daily chart be the new initial upside target on a short-term basis? If there was a bullish imbalance that formed, I didn't see. So let's do NVIDIA, because this one I was asked about multiple times as well. So just looking at, we'll look at this from like a larger scale here. Let me just clear some of these out here. So you look into NVIDIA from your monthly, and you're really nowhere close to what discount of this current price run is from a monthly perspective. This is okay. Is this something that I want to long-term buy at this point? No. Can this be tradable? Yes. There was a bullish imbalance, and look how price reacted off of the bullish imbalance. Enough to complete the Mando model here, right? And just note that if you were to go back historically and look at things like Amazon, Meta, there's so many. Sometimes it takes like 10 years for a monthly retracement. Okay, so that's why like having this as the big picture is helpful, but it's not something that is like make or break in a sense, where it's like if NVIDIA is bullish on a smaller time frame, that's fine, I can trade that. I'm just not planning on holding that for like anything really beyond the all-time high at that point, just knowing that we're so far in premium. Okay, here's NVIDIA from your your weekly time frame, and this chart is pretty ugly, especially after we swept those highs here. Okay, so realistically your new range would be set as something like this from your low up to your high. So I don't love this automatically. Now there's actually a really big spot on NVIDIA that I think is like very, very important moving forward here, and we'll get to that when we get down into the 4-hour, but more specifically on the daily with this shift, because I think it would be fair, I think we would all agree that this is a daily shift, right? Here's the price run that took out that all-time high, and shifting this, right, that would technically create a bearish price run on the daily time frame. Okay, but then we zoom out and we look at it from a weekly, and basically on a weekly that's just us turtle souping, right? So this is why I'm pivoting to the higher time frame. I'm still going to weigh that higher time frame, and this is why, okay, I think it's, you know, very important to use the higher time frame because there is a key coming up here. But even if we were to take out this low, we could look at it as something like this. Look, if we were to form an imbalance following this sweep here, or we get rid of the imbalance that got us down here, right? I'm bullish to at least 50%. And look what we have getting right up into that 50%. Bearish imbalance, which would be my showtime. Why would this be showtime? Daily's bearish. We took out this low. We took out the low of the price run on the daily. Our weekly is still bullish. Our monthly is still bullish. Can we shift from this point? Turtle soup sweep liquidity in the inverse direction of the overarching trend prior to running back up here. I think that's has a good possibility of happening, and this is where it lies. And I know Ryan brought this up, and this is really before we even made that run up on Nvidia. This is where I wanted the freaking thing, and it didn't get to it, and it was so annoying. But price got in. I wanted it inside these relative, take out these relative equal lows, get inside this 4-hour bullish imbalance, and then take off, right? We still have an opportunity to do that, right? Sure, the daily trend is, shifted bearish, right? But on our higher time frame, has anything really changed? Nah, not really. We're still inside that structure on the weekly. If we fail this weekly, we're likely going to do it with an imbalance, and that imbalance would suggest a discount. And where would that imbalance suggest a discount? Here, which is dangerous. This is a big ass range. Think about where the market would be at 81 Nvidia. That's really, really bad. So I think this is actually like really, really an important spot, specifically 132.89. And just to be fair and just to be honest with you guys, I'm like, I don't want to give percentages, but I'm like really going to look to play this. And I'm not just going to have I have the alert here, but I don't have an order set here. Okay, I want to see price get in, and let's see us make some progress out of that. If we make an hourly imbalance, right, I'll give that hourly a try. I don't know if I want to risk this full sizing, right? That's from like 132 to 127. It's $5. It's not too bad, but I like this one because it's kind of to me, a make or break. Like, I think the market's actually fucked if Nvidia fails in this vicinity. So let's see. Does that make sense on the video there? It is more difficult because it is crossed up all over the place. You got your weekly looking bullish. You have your daily that doesn't look so bullish. But to me, I think that's a pretty good spot. If in calls on the video, would you give it time? It depends. What's your target? Are you looking at hourly buy side targets? Are you looking at weekly buy side targets? Are you looking, it 100% will vary, right? 100% going to vary depending on your own personal risk preference. And that's why the alerts are just they're not going to help you at all, right? Let's just say, for example, let's say I get into Nvidia and I go fat, right? Maybe, or no, you know what? I'm going to use this example. Maybe I go light, okay? And I just make a couple bucks. Maybe that couple bucks isn't enough for you, and maybe you decide to hold it. Price gets up into this bearish imbalance after getting down into here, and we retrace back into a newly formed bullish imbalance or something like that. Your contract may have been up quite a bit, and now your contract is even or down a little bit, and you sell prior to the next move, right? That's why I don't think just the universal call or alert works for everybody, because everybody is different. Everybody has a different size account. Everybody has different risk criteria. Everybody's going to be buying a different contract. To me, this having an understanding of how price works and where would be like a potential area that you could look for retracements and such, I think knowing that is way more valuable than having a specific long or short call. But and always, to answer the question, I always give it time. To me, there's no reason to not give it time. I'll cough up the extra bucks to be a little bit safer. Even if I'm wrong, I'm not going to get smoked as bad as I would if I had weekly contracts or something on it. Yep. Yeah, there's a lot of tickers that have been many, many years prior to any higher time frame retracement. Yep. The daily, weekly, that tends to happen much more frequently, but a lot of the time on the monthly and beyond doesn't do that as much. So it did complete a Manda model on the 4-hour, but not into the fair value gap. No, it didn't. No. So look, this was ready. We shifted structure here with what price run from this low up to this high. Okay. Here's your discount retracement. See 50% right here. Discount retracement. This is a bullish breaker, not quite the imbalance that I was hoping for, and we took off. I basically I didn't get in my shorter dated calls. I ended up making pretty good money on Nvidia, but I didn't get to reload on the shorter dated calls, unfortunately, because it didn't meet the criteria for me. It is what it is. I'll take that. But now you're going to say, well, what was the price run to take out that high to get you that new all-time high? And it was this low to that high. Wait, we're going to shift structure here? On a smaller time frame, sure, but what is that smaller time frame shift? Just a turtle soup on the higher time frame, right? That's the way I'm looking at it. And to me, again, it kind of goes back to the idea, this is really a make or break. Is this the most high probability trade setup? Probably not, no. But I like being in that situation where it's really a make or break dire situation. If I'm wrong, I'm wrong. But now I can pivot and I can buy into the other side of the trade idea. And I don't, I'm not just going to have hopium in hopes that it works out properly or the way I want it to work out. And kind of just remove that emotion that's unnecessary from it. But okay, let's keep it rolling here. But that's just the NVIDIA breakdown there. Short dated equals ouch. Longer dated might have to eat some theta within your risk. Always, yeah. I mean, look, longer dated. If you're buying contracts that are $30 out of the money, I think that's probably equally as dumb as buying like 0DTEs or something like that. And look, I play 0DTEs from time to time. I used to do it religiously. I just personally, at this point, think, sure, look, if you're feeling really, really good about a setup, right, and it's something that you've seen over and over and over again, and you believe that it's going to happen, relatively quickly. I'm not saying 0DT. I think 0DT, you're just automatically adding in difficulty when it's not really necessary. But, maybe a weekly contract or something like that, and your target's not astronomical or anything like that. You could, but you have to have serious risk management in place just in case you're wrong. Yeah, I mean, I don't want to be the guy to say if you trade a 0DT, you're an idiot. If you trade a weekly call, you're an idiot, because I do it sometimes too. But I just go into those shorter dated contracts, if I were to even take them in the first place, with the idea that this is not going to be, I'm not looking for a 16-point run in a week. I'm never looking towards something like that, but just a much smaller target. I prefer a month out. Yeah, for the most part, I usually just go a month out, and I'm still not really looking at astronomically high targets or anything like that. For the most part, when I swing shares, I am, but when I'm fighting the clock, I'd rather buy a little bit more, closer to the money, and give myself some time for it to operate. Especially if the imbalance that I'm buying off of is pretty big. If the imbalance I'm buying off of is like a $2 or $3 range, let's say, for example, I'm going to give it some time, because that trade doesn't go bad for a couple bucks, and it could take some time inside there. Does this crew watch the chart on the options chain during your trade? No, never. Yeah, the McDonald's short, it was the joke for sure. Yeah, to me, if you're going into a trade and you're not pressing and you're not mapping the idea before you enter, I think you're just you're asking for unnecessary stress. You're asking for potentially bigger losses. you're potentially looking at a bag holding type of situation. Why not just map it out before, right? And say, okay, this is the imbalance I'm buying off of. My stop loss is below the low of the candle that created this imbalance, and my take profit is going to be here. That's it, right? And by you doing that before the trade, with futures it's a lot easier because it's 1-to-1. It's like every point you're getting $20. You know exactly what the gain is. With the options, you got to do a little bit of math, right? You go to your delta, see what your delta is. If your delta is 50, that means for every $1 move on the underlying, you're going to be gaining $50 on that contract, right? And let's say you have 10 contracts, so every $1 move, you're now making $500, right? But you can, and vice versa. If it were to go in the inverse direction of where you wanted it to go, and you're wrong, you have to take that into consideration too. For every $1 move, if my delta is 50, I'm losing $500 per $1, and after the first dollar, you got to account for gamma on top of it. And if you're trading something astronomically way out of the money, you're really going to have to worry about the theta too. And the theta is going to eat that contract. So it's really, I don't think it's really by design for like people like us to win in this situation, but it does give you the opportunity to manage larger pools of money with an option than what it would be for a share, for example. But you have to kind of, agree to the stipulations of that, where it's like, okay, I have to be understanding that as the probability of this decreases, as the probability of me ending up in the money decreases, right? Time goes down, and maybe you're going in the opposite direction of what you want it to go, where you want it to go. You're gonna get hit by that. All right, let's keep rolling here with some of these other names. There was a bunch that were posted in the chat. So GLD, sure, we'll do GLD first. And I'm gonna run through these pretty quickly. Bullish order block here. Okay, so here's a bullish monthly imbalance. Okay, so far on this monthly, we are painting a bullish order block. If we were to close above this, this is really bad. Now here's the thing. We talk about that first imbalance that forms. Let's just put it on the record. I would prefer it to be a bullish fair value gap versus this volume imbalance. Gaps down into imbalances don't tend to end all that well. So when we're looking for that odd NAM setup, I'd prefer it to be a fair value gap and not a volume imbalance. So gold so far on the monthly looks, that's strong. Okay. There are relative equal lows here. Don't really love that all that much. No imbalance formed here on the weekly time frame. I don't think chasing that 251 is all that crazy. Let's just see if there's a way that this can be mapped. Sure. Okay, so from where we currently are, I mean, I'm personally not like all that interested at this particular point. We just took buy side, and we ran quite a bit. We're well in premium of our new range. Okay, so price trying to take out this high and that high, from that low up to that high. So if it weren't to be discounted, there's no real interest for me. But this looks pretty good, and then we could just again see on the hourly time frame. Hourly, we are running into a 4-hour bearish imbalance here. Here, low, high, discount, run through highs, complete. This is your little turtle soup move. So far it's pretty good, and that would be that buy side target. We're inside a bearish imbalance here as well, and we didn't create an imbalance. Really, to me, it would need to either form an imbalance or get back into something like this. That way I at least have structure for the idea. For me buying here, where would my stop loss really be? I don't know. It would be like here. So I mean, you can define it, I guess, but to me it's just not as precise, not as tight with that. So gold, decent at the current point. The only problem is that it ran quite a bit to close out last week, so chasing that kind of sucks. COPX. Okay, not bad. Let's just see where we are on the bigger picture of things. monthly showtime here. And zoom in. Okay. What was the price run to take out that all-time low? From high down to, whoops, our low. Okay. Discount bearish imbalance right here. Okay. This is showtime. If this is going to shift up, odds are it's probably going to happen here. Okay. So this is decent. Here. Low up to your high, discount retracement, bullish imbalance, run for highs, Manda model complete. And then inside, my range is the way it is right now because low to your high, discount retracement, bullish imbalance, run for highs. So that's why my range is where it's mapped right now. So not bad. Ideally, over the next couple of weeks, you got like 18 days. Preferably, you at least get to 40.72 to prevent the monthly bearish fair value gap from forming. Similarly here, okay, we swept that low, that's good. Okay, we even swept this low here, if I'm not mistaken. Low 37.97, 37.95, good. Okay, you have a bullish volume imbalance here. Could this be the structure of your idea? Sure. For somebody who might be looking at this from I want some confirmation, it's got to wipe this out or form a bullish fair value gap, right? At that point, I think you run these highs, relative equal highs here first, and then this next. And that's from a weekly perspective. Now, this could take time as well. Just note, for reference, that otherwise, this looks pretty dang good. Okay. But structurally, the only way I'm trading it at this moment would be an entry in that volume imbalance with the stop loss at these lows. And if I'm wrong, look, price could even come here. Okay. This is more favorable, deeper discount bullish imbalance. But where we currently stand, if a bearish level gets mitigated or a bullish level is created, that could indicate that I don't get this opportunity and I get a chance at it higher up here. Okay, so that's COPX. MNMD, MindMed. Wow, I haven't seen this one in a while. I don't know if this one is split or anything like that. Okay, so let's see. MindMed. Did we take out those all-time lows? Oh, that's lame. Okay, so we didn't take out the all-time lows on the monthly time frame. Your range is looking something like this. High down to your low. And this is actually pretty good. Okay, so here's the thing. Here's a bearish imbalance. Okay, we mitigated that bearish imbalance. Okay, signaling we about to see a bullish run here. It's pretty good so far. Okay, monthly is not really offering us like entry point. Really, realistically, it was in October, but whatever, that's fine. Let's see if we can find a smaller time frame, at least a way to map this. Your next bearish imbalance doesn't kick in until about 23.10, and you got buy side liquidity without any imbalance up here at 19.95. Wow. The only thing is, how many times did this split? What's the parameters of this? Because that's going to change things a lot depending on how many times this thing split. Oh, here, one. Oof. Yeah, I hate these. I hate when they split like this. Preferably, I don't trade this at all. To be honest, I'm gonna stop just talking about it because I don't anticipate MindMed ever going to $77. I know you're gonna say, well, you want it to go to 50%. This thing split so many times that I think that's a really, really big ask. I don't anticipate that at all. So while this could be tradable, if anything, it would be much smaller in terms of like my actual price run. So it would be something like this, where it's a low, high, maybe look for 12.12, but that's really about it. I do not anticipate this going to $50, $70, whatever it is, just based on how many times it's split, share structure. They diluted the shit out of this thing. It's not ideal. So let's see. Yeah, tons of reverse splits on that. Yeah. I don't know. I think 89K is gonna come here on Bitcoin. Yeah, we'll put a few of the ones that you guys threw in here. We were never on anything with there's never a we. We got to get that out of our head. There's no we. There's I. That's all. And we'll do you as well because nothing changed in the setup at all. But let's see. So like you was just saying on the video, what confuses me, if it sweeps low for liquidity, I see that as a market structure shift. Yes, on a smaller time frame, Slick. I think you get locked into the daily time frame a little too much. I think you need to open it up just a bit. Yeah, no, I understand what you're saying. Yep. But in order for us to get higher time frame discounts, what has to happen on smaller time frames? We have to shift structure. It's the only way that we're going to get into a higher time frame discount, right? That'd be the only thing that makes sense, unless we have the exact same range. Does that make sense? Yeah, never, 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 never. Your criteria might be completely different. You might be trading it off the hourly time frame. I'm not. So for example, we'll do you right now just because you, and this is why there's no alerts. You look at you, okay? Got into a monthly bearish fair value gap. That's okay. Prices retracing. Took out last month's low. Come on over here to the weekly. Inside this weekly setup, what has changed? Nothing. Entry. If you're looking at it from a weekly perspective, what's your entry inside this bullish imbalance area of accumulation? Where's the ultimate target? Buy side liquidity here. Okay. Where is the and just for reference, this candle's high is 28.67. Where is it? 50% of the range is 28.72. We didn't hit 50% either. Okay. Where's the stop loss? Low of the candle that created the imbalance, about $3 lower from where we are right now. Ultimate target up here. Okay. If you look at it from a smaller time frame, of course, that's going to stop you out. But at that point, you had a pretty quick trigger in a sense where you bought this gap, right? If you didn't buy it inside this gap, you bought it up here. You chased it in the first place. But if you bought it inside this imbalance, you assumed the risk of $1.20 per contract. When price were to take out the low of the candle that created that imbalance, you are, you're essentially dealing with $1.40 to the downside. Should never get smoked on that if you're looking at it from a smaller time frame. Even smaller on this. Oh, whoops. Even smaller if you look at it from this. Okay. Up here, right? Let's say this was your structure, right? Looking at the relative equal lows for the entry, 23.38. You lose here, 22.39, right? That's if you're not looking at it from a weekly, right? If you bought smaller time frame contracts, or at that point you were like, okay, this is enough. I can't be looking at it beyond that. But mapping that idea there in itself is not a bad idea ever, So, and in reality, again, nothing has changed inside this setup, just in discount, and filled up all these imbalances. You created a new one, which is not great, but it's okay. The weekly setup still remains right here. So that's you. Yeah, so if you're looking at it from the weekly, then I guess the word would be like the assumption of risk at this point. It's got to be 17.29 or there's no trade idea, right? Below that 17.29, at that point it's toast. The low of the candle that created the imbalance, and if that's too big, then that's not a trade. Why get into something that it's too big? All right, let's keep rolling here. There was a few more up here. Let me scroll up. ASAN, sure, ASAN. All right, so ideally monthly you'd form an imbalance here over the next couple of weeks. Let's see what that looks like. That was actually the second imbalance you formed on the monthly here. You swept buy side here, so your current range looking something like this. This is an odd NAM. Okay, what does that mean? If we look at this from the big grand scheme of things, now I don't think there was a split. No, okay, good. Okay, so at some point I would not be shocked if this company went back up here. Okay, I know it sounds crazy. It's always crazy until it happens. See something like a Carvana or one of those for reference, but so far pretty good. We are discounted inside that run. Let's look at the weekly. Whoops. Okay, weekly is not discounted. I'm just eyeballing it here. Ready, from your low, let's just see, up to your high. Discount retracement here. Bullish order block, not one that I like, but so be it. Low, up to your high. Oh, we are discounted. Okay, discount bullish imbalance right here. Pretty good. Okay, and I'm just gonna leave it at 50 just to try and get the visual optics where it's like over 50%. I don't really want the long. Here's a bullish breaker, low, high, lower low, break up and through. You can anticipate the high of that sequence to act as a support level moving forward. We're in it. Pretty good there too. Okay, let's just zoom out a little bit here. Let me just confirm one more thing. Fantastic. Okay, this is good. First imbalance that formed here. Not bad at all. No bullish, bearish imbalances overhead either. Let's look at the daily, just see where we can run into some potential trouble. This one's actually pretty good. And I don't mean actually like, oh wow, actually. There's just not really that many good setups. Nothing against you there, Tier. Good find. Similarly, daily breaker, low, high, lower low, break up and through. We would anticipate, whoops, the high of that sequence to act as a support level moving forward. Pretty big breaker. You also got this bullish imbalance right here. Okay, let's just see where the daily range is. Hold on. From your low to your high, discount bullish imbalance, run for highs. One down, low, high, no discount. We are currently discounted, so it should look something like that. 50%. We do have a bullish imbalance here, which is great. Okay, there is a daily imbalance. Okay, so if you want like the utmost ultimate confidence that this is going to work out, also got daily relative equal highs. This has a lot going for it. If you want to wait for some level of confirmation, because I know some people like that, in reality, for me, like if I were to take this, if you had to force me to take this right now, my stop loss is at $15, so I'm risking $4 to make $8 to the upside. It's not bad, but if you wanted like an extra little bit of a layer, you could wait for a bearish level to get smoked, right, or a bullish level to form. Okay, so even if we went to a even smaller time frame on something like this, okay, again, low to your high. Let's see, did we hit it? Low 1480. Nope. Oh my god, by 1 cent we didn't get into discount. 1 cent. That's brutal. Okay, but anyways, that's fine. Nothing really changes. We're still in discount, but here we just have to note this. If we didn't get into it already, I think we did. High, low, higher high, breakdown and through. We would anticipate the low of that sequence to act as a resistance level moving forward. That is a bearish breaker. The low of that is 2303. The high of that is 2303. You can't make it up, folks. 2 taps into the breaker. Left relative equal highs. Swept liquidity in the inverse direction of your overarching trend. Okay, and there's our 4-hour bullish imbalance so far. So I need a bearish level mitigated or a bullish level to get formed, and I need to fix this. I don't know why it's green right now. Okay. Oh no. Not bad. Not bad at all. It's a really good one. A lot of layers to this one. So if you were in the camp of I want to play this long, but I want to be extra cautious or something like that, you could look towards just one bearish level getting smoked. One bearish level gets smoked. What are you missing out on? 40 cents, 45 cents to give you a little bit more confidence that this is going to take off and go for those relative equal highs. This is one of the better setups for sure. I think, Kyle, you might be on ASON too, but this one looks, that looked pretty good. Let's see what else. MCY, sure. Ooh, nice. Okay. All right. Not a huge fan there, but that's okay. That might be even a higher time frame level that we're looking at in this vicinity. You made the breaker, you got into the breaker, and you left it, so that's pretty good. Your current range is looking something like this from your low up to your high. Okay. Discount monthly imbalance is right here. Did we tap the high of it? Let's see.